Welcome back. We have a couple of minutes, I think, before the pre-opening rates do kick in, and the initial tick, the SGX Nifty is suggesting that the start will be in the red. It's about down 81 odd points. So let's see which way it goes. Prakash Diwan is still with us. So Prakash, what are your thoughts on the two listings that we have today, right? There's Five Star Business, there's Archean Chemicals. Amongst the two, Archean is supposed to have a strong one. But would you buy either of these stocks post-listing from a long-term perspective?
Sonia, to be honest, I haven't, I've chosen not to participate in both these names and wait for, some more clarity for the business understanding to be in terms of financials, in terms of growth, in terms of numbers to be much more clearer. And that would probably mean that at least a quarter or two you need to, post-listing, you need to wait. But, what's interesting is that Archean has, the kind of portfolio that it comes with is something which could be probably very interesting and people will probably like it. I'm not too sure about Five Star in that sense. It just probably stops at the name. There's nothing very spectacular about the business that I found. But I would wait for the listing and not jump into it at this point in time immediately.
All right, Prakash, stay with us. Coming back to you, but Anuj is here in the studios to run us through what he's watching out for. Anuj, hi, good morning. Watched the game yesterday?
No, actually, I didn't. I think I'm waiting for the better games. I think.
Next one is Germany, right? Germany, Iran.
Yes, and I think this weekend, I think we have a really good game. Mexico, Argentina. I think that's going to be the cracker. Only problem is it will happen post midnight.
It's a weekend.
It's a weekend. That's what weekends are for, right?
Anyway, let's talk about the setup then. For me, what stands out is this big decline in crude. That's, of course, a big sentiment positive. Though FI buying momentum has slowed down. Maybe it's because of those lock-ins which are ending and some selling absorption which is happening over there. And, of course, there's some selling exhaustion as well at higher level. Keep an eye on the market breadth, Prashant, Sonia, Nigel, because, that's something which has been quite weak, not just for India, but globally as well. That's not a good indicator because, this rally doesn't feel like it's a rally. On the Nifty, though, we are not breaking even the 10-day exponential moving average. That's the first support, 18,245 and 18,209 Friday's low. That becomes your support to watch. And the biggest support, of course, is 18,050. On the Bank Nifty, which is the strongest index, I think the base is at 42,200. And all of the Bank Nifty components are really very strong. In fact, if you look at HDFC Bank, ICICI Bank, SBI and Kotak, they form over 75% of the Bank Nifty. So obviously, that's a bit of a stronger index. But overall, let's see if the first hour gap is bought or not. Because on Friday, you did see that towards the end, there was that buying. Buying on dips and plunges is working in this market.
Okay, Anuj, thanks a lot for that. Well, let's get Manoj Muralidharan, who's the Vice President Derivatives at Religate Broking, to give us his view. Manoj, good morning. Your thoughts on the market and what are the individual stocks that you're looking at today?
Yeah, good morning. Now, this being the last 4 days into expiry, generally we see a dip and that is being built up. If you see from October to November and even in this series, we are expecting that the Nifty might take a support closer to 18,050 to 18,100. So roughly at 200 to 250 odd points of dip, I might not use it as a correction because we believe that that might be the formation of long rolls from November to December. So the Nifty can inch more towards the 18,600 eventually in the first few days of December series. Stock specific, we believe that Tata Motors and Infosys would be the one which would see more long built up. But the weighted average price of 416 is a better level to go long on Tata Motors. So I'll wait for the dip. Anywhere closer to 416 becomes a good buy with a stop loss of 408, and the stock has a potential to go all the way to 442 to 446. Infosys, I guess IT has also seen some buying, so possible 1580, 1580 is a better level to go long on Infosys. When you go into the December series with a stop loss of around 1565, and we're expecting closer to 1620 as a target on that.
Okay, all right. Thanks a lot for that. The pre-opening rates are settling at this point in time, so settling slightly lower. Just pull up the Nifty for you. They're kicking in the last 3 or 4 minutes. The steel stocks, of course, will be in focus. There's a sentiment move. Tata Steel is up about 3.5%. NMDC could also be in the green this morning, so do keep your eye out on that. But as the analyst was telling us that the world market has changed a lot right now and exports are not a viable option. In fact, the export prices are much lower. So this would come at best as a sentiment positive for some of these companies. The other stocks perhaps to look at are Escorts, where the guidance has been positive, and Zomato, where there's a third management exit in the last 1 month. So these are some stocks that we're going to track. But Aarti Industries is another one that we're looking at this morning, the largest consumer of nitric acid in India, and which is Aarti Industries, and Deepak Fertilizers, which is the largest producer of nitric acid in India, in Southeast Asia, have decided to come together. They've signed a 20-year binding term sheet for the offtake and supply of nitric acid. Rajendra Gogri, who's the chairman and managing director at Aarti Industries, joins us now. Mr. Gogri, good morning. This is a 20-year contract that you've signed. Can you tell us when does the supply start coming in for the company, and also is the pricing of the contract fixed?
Yeah, actually, Deepak Fertilizer currently also is our largest supplier, and we have an ongoing contract which expires on 1st April 23. And then this 20-year contract kicks in, and we have structured a pricing formula, which is a raw material-based pricing for nitric acid.
Mr. Gogri, I mean, this agreement with Deepak has been there for many, many years, right? So you're formalizing it in a way, right? That's the new thing. That's what's happening.
No, generally we have been having 3-4 years agreement.
Right.
And this time, in view of overall increase in demand of nitric acid, and typically it takes about 2.5 to 3 years to set up nitric acid plants.
Right. No, so you're saying that typically the term of the agreement would be 3 to 4 years, and this one you now want to kind of have for a longer time period.
Yes, yes.
Okay. What benefits can you expect because of the long-term nature of this offtake agreement? Could you quantify it?
Yeah, basically now it is much on a stronger footing. We have both supply of pay, take of pay structure also put into that. And otherwise, in view of overall growing nitric acid demand, we had to put our own plant. We had already announced putting up a concentration plant in month of April. Mm-hmm. We are just evaluating whether we put our own WNA plant. That's where this long-term contract discussion started.
So this is the 225 to 250 tons per day plant that you were contemplating putting up.
Yes, yes.
So you may not need to do this anymore?
Yeah, we'll not be putting up that plant now once we have this contract in place.
And what was the what was the investment kept aside for that?
And that was only about 150 to 200 crores. Okay. But if we had to put the entire integrated plant, it would have cost us 800 to maybe 1,000 crore because of the greenfield plant.
Okay, so this is, 800 to 1,000 crores would have been the cost for you if you had gone ahead and put up that plant. So in all likelihood, you won't go ahead with that plant, right?
Yeah, we'll not
have this contract.
No, we'll not go ahead. So that frees up a lot of resources for us for regular business, for value-added specialty intermediates. So that's a big advantage for us.
Okay. 8,000 crores is the size of this contract spread over 20 years. So I assume you'll be paying this in equal amounts. And what does this do to your balance sheet?
No, basically it will be based on the yearly supply. So this is just an estimate of the turnover, but the actual turnover will vary based on the actual raw material prices and everything. So it's not like a lump sum payment.
Okay. You were also guided earlier for an EBITDA of about 1,100 crores in FY23, which means that the first half of the year will be very similar to the second half. Are you being a bit cautious in terms of your guidance because of the challenging environment? And once this supply comes through, then what would it mean for your EBITDA?
Yeah, currently, especially the dye-stuff and pigment sector is little slow. That is the reason, we had guided that we'll have a second half also similar to the first half FY23 in EBITDA. And we have guided about 25% CAGR for next 2 years as the more and more volume kicks in and a lot of gross profits should lead into EBITDA in the next 2 years. And this context, this contract really helps us, to get the volume security of nitric acid also and price stability.
Okay. Mr. Gogri, 2 points. One, you said this frees up capital because you don't have to set up your own plant. What will you do with, in terms of capital allocation?
Yeah, we had already announced earlier, overall as a composite company, about 4,500 to 5,000 crore capex for 3 years.
Right.
And now the pharma is hyped off. And in last conference call, we have said that next 2 years, FY24 and FY25 will be spending about 3,000 crores.
Okay. Also, in terms of sort of, you know, you're an important customer for Deepak Fertilizer now. So you're the, you know, will they have to, is there any talk at this stage that they'll have to increase their capacity because they're also setting up a plant on nitric acid after this agreement?
I think they will have to decide the timing, but most probably they will have to increase their capacity also.
Okay.
You were telling us about how the situation is a bit challenging for the industry. You have exposure to some discretionary sectors as well, like dyes, paper. Many chemical companies have spoken about lower demand from these segments too. How will they impact you, and will there be further pressure there because of the inflation situation?
Yeah, that's why in second half we have forecasted around 550 EBITDA, which is more or less equal to the first half. I think that has been factored in there.
All right, we'll leave it there, Mr. Gogri. Appreciate you joining us. Good speaking with you. Thank you very much for your time and good luck. That's Aarti Industries. We'll try and have a conversation with Deepak Fertilizer Management as well. As Mr. Gogri said, most likely they'll have to up their capacity, after this 20-year supply agreement. 656 is where Aarti is at. The pre-open rates are there. Let's just take a quick look. The pre-open is, by the way, ended, let's see where. So it's 61 points lower. So that's 1/3% down. 18,246 is where we find ourselves at. The low, I think, on Friday was 18,209, from where the market in the last hour bounced 100 points. So that, as I said earlier, remains the first level to track to see if that holds or not. But 9-10 calls for now. Sudarshan and Mitesh are back with us. Sudarshan, first to you. What are you tracking?
Well, I would avoid the Nifty today, and NMDC is a buy with a stop under 106.
Okay, NMDC is a buy with a stop at 106, reacting well to that news flow that came in, up about 2% right now. Mitesh, what about you? What would the top 10 call be?
Yeah, I'll go with the sell call today. I'll choose a sell on Laurus Labs with a stop at 458 for targets of 432.
Okay, let's get a quick call on what the standout brokerage report is for the day. Nimesh is here to tell us more. Nimesh.
Hi, Sonia. So today's standard is on Apollo Hospitals. Interesting upgrade from UBS. So they've upgraded the stock to a buy now from neutral, and they've raised the target price to 5,600. Now, they believe that the company is executing well in terms of new initiatives, growth, as well as the core segments. In fact, they expect the market is not pricing in the early success of the digital strategy. Furthermore, on the core hospital business, they are recording. They're seeing a strong traction, and the expansion in physical pharmacy diagnostics is going to help in terms of more market share gains. UBS believes that market is going to be positively surprised by company's success in multiple fronts, and hence an upgrade to a buy now from neutral, and they've raised the target price in Apollo Hospital to 5,600 now. So that's the standard brokerage today.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's hop across to Mangalam and revise a couple of these stocks that are going to be in focus. Mangalam's here to tell us about Zomato. Mangalam?
Well, for Zomato, there have been 3 large exits in the last 1 month itself, and the latest one came on Friday, where the co-founder Mohit Gupta has announced his departure. The recent exits include the likes of Rahul Ganju, who's the head of new initiatives. You had Siddharth Jhawar as well, who's the head of Intercity Legends, resigning just a few weeks ago. On the same, we had Jeffries Wright on this. They said that going by the release, it does not appear that they are actually looking for a successor to Mohit Gupta. And in their interactions, they found that Deepinder Goyal himself was in control of the business. So they do not see any big disruption in or major change in the strategy of the company. And with these departures, now it is clear Zomato's leadership is 3-pronged right now. Deepinder Goyal will lead their food delivery business and oversee the other 2 businesses. The other 2 businesses being Blinkit, which is headed by Albinder Dinsa, as well as Hyperpure, which is currently led by Rakesh Ranjan. So no real problems. They are positive on the stock, but in the near term, they believe it would be range bound, primarily because the company traverses through the growth versus profitability path going forward. So they will revise their call only after the 3rd quarter numbers.
Okay, thanks a lot for that, Mangalam. Well, Escorts is the other one that we're looking at this morning. Now, the company has presented a midterm business plan. They put this out on Friday, and the Qs are quite positive. They expect the revenues to grow more than 2.5 times by FY28 over FY22. The EBITDA margins are expected to improve to mid-teens versus 10.8%. Earlier, they're looking to attain leadership in the India-led exports of tractors, and they're looking to be a challenging brand in the domestic space as well. Currently, their market share is 10.8%. Now, how are they planning to do all of that? They are looking to expand their capacity from 170,000 to 300,000, and the total capex lined up is 3,500 to 4,000 crores. The only thing is the stock has run up quite a bit, so that's perhaps the reason why I'm not seeing a big move there. JP Morgan has maintained an underweight. They say they are encouraged by the company's roadmap for sure, but the stock is now quite expensive, trading at 25 times FY24 and perhaps pricing in a lot of the good news and the strong growth. Mitesh, just a quick call on Escorts and the chart.
So Escorts, last few months we saw a strong outperformance and then the stock kind of dipped off and now it's doing some kind of good base building around this 1920, 1930 mark on the downside. But I think on the upside, lacks the strength to get past 2100, 2120. So I think my belief is that we'll still be range bound, but now the stock can possibly having multiple times taken support at the lower end, I think becomes a buy around that range. And once it gives a signal on the upside, it could head towards the upper end of the range.
Okay, thanks a lot for that. So that's the first tick on the index, down about 60 odd points. The Sensex down almost 200 odd points. So as expected, the market has opened with a slight bit of a cut. Not as bad as what the SGX was suggesting though, but nevertheless, it's a minor cut. The Nifty Bank is down about 0.3% at the moment, while you have the mid-cap index that's absolutely flat, just about a 50-point cut is what you're seeing. The IT index is also taking a bit of a knock this morning, so 200 points gone on the Nifty IT index, down about 0.6%. And, some of these IT stocks, Infosys, Tech Mahindra, are the big losers at the moment, down almost about 1%. In fact, financials like Bajaj Finance are also down about 1%, indicating that the pressure is coming from both ends today. Just take a look at ONGC and how that one's moving this morning. I think there's a big knock there too. ONGC down 4.5%, so do keep your eye out on that stock. A couple of others like IndusInd Bank, SBI Life are the other big losers that you're seeing on the index this morning. Of course, lots of stocks, in the green. There's JSW Steel, Tata Steel, Tata Motors, Britannia, Eicher Motors, etc. that are doing pretty well. Oil marketing companies, BPCL, also in the green. The export duty has been rolled back, so there is in general a hue of green. Jindal Steel is up in the green as well. NMDC, we should take a look at that one. So that's really the big news flow. IEX, the board will be meeting for a buyback on the 25th of November. So IEX is the other stock that's holding up in the green right now. So a lot of stocks moving around, but for the market, just quiet. The Sensex down actually 300 points right now. The Nifty hanging on to 18,200. How is the broader market?
Well, as we pointed out in the morning, the biggest beneficiary, clear-cut beneficiary will be Godavari Power and Ispat. That's flying away up close to around 15%. They used to export a lot more, and that got curbed. You get better realizations in the export market for their pellets. So, that one is up close to around 15%. Sarda Energy, another smaller name, volume's not very, very high out there, but that's a beneficiary as well because some part of their pellets could possibly be exported. We'll require clarity on that. But for some of these players, the pricing itself will increase even in the domestic market, even if they don't export. So that explains why Sarda Energy is higher. JSL Stainless, as we told you earlier, there's a power crisis in Europe. So there's an opportunity out there. And now with the export duty coming off, well, they can, restart these exports out there. You have RSI Magnesita. They have bought Dalmia's refractory business. Expensive, but the street likes it. So that one's opened up with a gain of close to around 3% or thereabouts. The steel stocks, they have opened up in the green, but actually they've come off a little bit as well. So no big gains out there. The reason is that volumes, they could go up, but they won't be making that much of profitability or any profitability whatsoever. It's still more profitable to sell in the domestic market. So it helps on the volumes front. However, on pricing, is unlikely to move the needle. Explains why all the steel stocks, well, they're up only around 0.5% to around 1% odd. Prashant, what else?
Well, on the Nifty, Nigel, we basically are at Friday's low point, which is 18,209. The low today is 18,201. So we dipped below it, but I think now is the test to see if it holds or not. So that's the first marker. 18,214 is where we are at. Almost just, around there. Let's just take a look at the Bank Nifty as well, the indices for a quick check, which is, I think the Bank Nifty is bouncing back a little bit better. So the low was 42,272. We're at about 42,308, 310 or so. Unlike the three-digit cut that we have on the index, on the Nifty. Let me just take a look at broader markets and see where else we are seeing some action. IEX is up about 3.5%. It's coming up with decent-sized volumes as well. So 143 on IEX. So that's something to watch. Timken has had a pretty volatile price move. Last Thursday, it was up 20%. Friday, it gave back some gains. It's back up about 3.6, 3.7%. There is PVR, which is coming up. Only mentioning all this because of volumes. PVR is up about 2.25%. Stocks back at almost 1,800 kind of levels. I mean, the two chemical companies, Aarti and Deepak, both start higher. Deepak is up 1.9 and Aarti is up about 2.5%. And we just had the management of Aarti speak with us earlier. I think Nigel mentioned RHIM, Magnesia, 4.5% higher, 674 on RHIM. And we have, by the way, the management joining us later as well. UCO Bank is starting about a 3.5% higher as well. Max Healthcare has got a 2% gain, but it's slow. I mean, volumes, etc., are slow to pick up. So I think give it some more time before things settle down. Zomato is down 2%, 65. So that's a cut. I mean, high-profile exits there continue. Nykaa is down 3%. Nykaa has been under pressure last few sessions. So 186 on Nykaa. And there is Mazgaon Dock, which is coming up with near a 3% cut as well. Bajaj Finance is down about 2%. So actually, Bajaj Finance is the top traded volume on the downside at about 66.55 or so at this point in time. Sonia.
Absolutely, right. So a lot of stocks in focus. I'm also looking at IEX. It's gaining some more ground this morning. So there is that buyback that can take place on the 25th of November. So IEX is rallying over there, up almost 5% now on IEX. Big move coming in there. And then Zomato, as you mentioned, I mean, of course, the business is recovering. But as we were mentioning earlier, this is the third high-level exit in the last 1 month. And Gupta's resignation is just days after Rahul Ganju, who was the head of new initiatives of Zomato, has resigned as well. Siddharth Jhawar recently resigned. He's the vice president of global growth. So mass resignations don't really bode too well from a shareholder standpoint. From a business standpoint, of course, things continue as is. I'm sure they have their plans in place. But it generally spooks shareholders when, these mass resignations happen, at least at the higher level. But of course, the big story is what's taking place in the steel sector.
Well, that's right, Sonia. A pleasant surprise came for the steel companies over the weekend. That's on Friday night. Our team from Delhi, that's Tim C. She joined in late on Friday and just said, expect this to come about. What are the measures? Well, they've rolled back some of those export duties that were levied earlier for steel products, for stainless steel products, as well as for iron ore with the Fe content of less than 58%. Well, it's come to zilch. That is absolutely nil, knocked off. With Fe content, iron ore with Fe content more than 58%, well, that's been reduced from around 50% to around 30%. For pellets, that's a big positive. It's come down to zero. While coking coal earlier attracted an import duty of close to around 2.5%, that's been reinstated. The possible reasons for the relaxation, well, one is part of the purpose. You wanted steel prices to cool off. They have cooled off. So part of the objective has been achieved. Second factor is steel demand has been waning. You have inventory levels that build up. India turned into a net importer of steel as well. So there were fears that maybe some of the steel companies that are already announced capex, maybe they'll pull that back. That was the fear. So on the back of some of these factors, we did have the pulling back of this export duty and also widening trade deficit number. That's been a bit of a worry. The impact, the steel stocks, they've come off the high point of the day. The reason being that it opens the export avenue. However, pricing is unlikely to move because the domestic prices are at a premium in comparison to imported steel. Stainless steel producers, clear beneficiaries out there because they can export yet again. JSL Stainless, for example, they used to export close to 25 to 30% of their volumes. It came down to around 5%. Pellet producers, namely Godavari Power and Ispat, they used to export bulk of their pellets. Now, in fact, they can resume that. So that's why that one's reacting positively. And there have been news over the last couple of days that there has been a price increase that's been pushed about on the weekend itself. And I know NMDC, they don't export directly, but if pellet prices move up, then they stand to benefit as well. Explain all of that. That explains why, in fact, NMDC is higher, JSL Stainless and Godavari Power and Ispat, clear beneficiaries, but seller news has played out for the steel stocks. Some of them have moved into the red. JSW Steel, JSPL, Tata Steel, as well as SAIL, all of them off the high point of the day, guys.
All right, Nigel, thanks very much for that. So that's steel, very much the focus sector of the day. The market, by the way, is below Friday's lowest point. We're at 18,194. There was a bit of a bounce which came off initially, but, so far it's around there, not in significant way below or above. But, this is just early days, so give it some more time. Market breadth is it's almost 1:1, so very little to kind of tell the difference between what's up and how many are down. almost converging. Andrew Holland is now joining us. He's our market master of the day, Chief Executive Officer, Evendus Alternate Strategies. Andrew, great to have you with us here on the program. Thank you very much. Overall, this pullback rally, especially in the US, seems to be fading a little bit. Momentum seems to be coming off. You could see that in stocks, the dollar, which came back up, yields, the 2-year, almost 20 basis points higher last week. Will that show up here in any significant way? Because, the market's been very, very close to all-time highs here in India. What's your sense?
It's quite interesting, Prashant. We're getting all the kind of brokers kind of forecast going into next year, and it's pretty much consensus now. It's something we talked about before as well, that as the Fed goes on pause next year, at some point, maybe in the first quarter, then emerging markets will be the place to find growth and a pickup in the global economy. Obviously not initially, but that's how the market will play it. But in that, interestingly, whilst everyone's talking about emerging markets, I think the overweights are going to be more of the exporting type countries like Korea, China, which is obviously, we've seen some kind of pickup there from the very low levels. So India actually remains an underweight. So as we said before, we do expect India to get the flows, but perhaps the flows will be more towards those markets which are deemed, one, to get a quicker pickup as the economy kind of starts to pick up in the second half of next year, and two, the valuations are more compelling in those markets as well. So I think, between now and the end of the year, I think a lot of investors will probably just sit on the sidelines, take risk off the table, because there's still, the Fed event in December, and obviously we'll be waiting for the commentary on that. But I think for the time being, our market's been a great outperformer, and it's still being used a little bit for obviously taking some money off the table and trying to kind of actively use it in other markets which have been beaten down a lot more.
Okay. Andrew, hi, good morning. So what do you do with individual pockets now? Do you still see some pockets of value? I'm asking because there seems to be no positive trigger for most industries. I mean, if you look at banks, a lot of the rally has already taken place. In IT, there's still no clarity whether business will improve. If the US goes into a recession, there could be more downsides. So where do you see a clear uptrend now where perhaps investors can participate in? I'm asking from a sectoral point of view.
So I think we're all scratching our heads on that one, because even with what was not a bad earnings season, you probably see more downgrades to earnings than upgrades, and that's just skewing the kind of valuation across many different sectors. I still think the themes that you have to look for would be, and I still like the banking sector and the auto sector. I mean, they might have those kind of pullbacks, but those are the times when you should be buying into it. But I think the themes could continue to remain defense, renewables, and then the kind of corporate capex cycle into those those industries where the supply chain has been difficult going forward. So semiconductors is one, electronics will be the other. So these are the new kind of themes which I think will play out in 2023. So the valuations, some of these sectors still remain high, but I think you have to be very selective on, who's going to be the beneficiary. We talked about this before, like if it's a capex cycle, it's not your normal roads and bridges. It's going to be those specialized, factories, buildings, which take a different type of company to help construct or build those businesses. So I think that's the one area I would look at. The second area I would think about as well is a lot of these platform stocks. I know at the moment there's a lot of shares, coming out as the freeze on some of the shareholders is open now for them to sell. But I think once that's over, I think this is again an industry which I think needs more more kind of detailed analysis, because it's not going away from us. It's just a matter of other valuations and profitability there now for sustainable move forward.
Hi, Andrew. Good morning. New age companies are looking interesting, is the sense that I'm getting. Which ones?
Well, there's only two or three of them, and unfortunately I can't mention individual stocks, but I think we know which ones they are, where the shares are coming open for people to sell. So I think obviously the Nikes, the Zomato's, and Paytms are the three which I would think as the platform companies. But I think a lot more analysis just needs to be done. But I think it's a sector which I think is going to gain more attention over the next 6 to 9 months.
Absolutely. By the way, the market breadth has turned decisively. We've got 1,100 stocks lower now and 850 stocks which are higher. Market breadth always is an indicator of just the texture and how that is turning. That's what I'm talking about. So that's crossed over. On the downside, and not in a good way, Cochin Shipyard is down 5%. Mazgaon is down 5%. So, these are stocks which were basically the leaders of the rally. I mean, pockets, defense, etc., railway infrastructure names recently. So market's been rotating into newer pockets of winners and gainers, and you're seeing some profit booking coming through in some of these names at this point. Andrew, so what else are you kind of taking money off from? Where are you putting incremental money to work? Anything else apart from what we've discussed?
No, Prashant, I mean, you can try and find, obviously the PSU banks has been, as we've talked before, over many years, it's been a place to rent in terms of the stocks, and that's played out very well. But, it's probably not sustainable from these levels onwards in the very short term. So those are the more shorter term trades, you're going to have to kind of think about as well. But to be honest, I think the market's going to grapple with another factor as well, Prashant, which is this. Whilst equities as an asset class has been, there's no other place to be when interest rates are lower. Given where interest rates are at the moment, and the fact that you can lock in, 7.5 plus in terms of, kind of guaranteed returns, I think investors are, moving across back to debt, and I think that's a phase that will continue until the RBI stops, and perhaps there's probably one more hike to come. But that's where we're seeing a lot of families and high net worth individuals now looking to move. And I think overseas, again, foreign investors, whilst they're buying into the emerging market story, the big risk is always going to be whether the recession is a lot more severe than people are hoping for at the moment. And that would lead to the other thing, which is probably putting pressure on the rupee at the moment, is our kind of current account deficit and balance of payments, because obviously our exports would falter because of that. So that's something which the market is starting to get to grips with. It's the outside risk of it being worse than the market's trying to bake in at the moment.
Just a final question. By the way, the market is taking a turn for the worse, so just don't lose sight of that. The Nifty is now down 140 points. The Bank Nifty is dragging its feet, and it's across the board. So it looks like it's a case of profit taking. There's Reliance, ITC, Bajaj Finance, ONGC, HDFC. So you slice through across sectors, and the large caps are all under pressure. Just a final word on, whether there is a big sell-off coming in this market, because we are sort of at elevated levels and things are not looking great across the globe as well. There is still an energy crisis playing out in Europe. In the US, a guest earlier on was saying that there's a 40% chance of a recession as well. Are you looking at a large sell-off for India, or do you think that India will continue to be resilient despite all the issues globally?
So to my mind, there's only way there's a large sell-off coming in India is if there's one of those unintended consequences of the Fed and other central banks tightening. We've seen it in the crypto world, and any tightening is going to be a financial problem, not an economic problem. We know the economic problems because of interest rate tightening. It's unintended consequences. So if there is a problem, it's going to be financial, and that would take our market down along with everyone else. But I think we'd probably be hit a little bit harder because there is still a lot of profits on the table compared to other emerging markets, particularly in Asia. So that's the only thing I can see that would bring our market down significantly at this time.
Andrew, very quickly before we let you go, who's taking home the glory? from the World Cup?
Well, you know, obviously I've got to say England, and I'll be there, sat there tonight watching, and it should be a slam dunk, but you never know.
All right, Andrew, look forward to chatting up with you all, soon, and let's see whether or not England can finally do it. Well, let's
wow, that's going to be something, right? He's there watching the England-Iran game tonight. That's what he said, and I mean, it's going to be fabulous to see.
Absolutely. Andrew, have a good one. Well, let's move on for now. Let's get back to the big story. Well, the boost coming for the steel industry. The government has rolled back most of the export duties on steel products, as well as stainless steel. Well, to understand that in better detail, we are joined by Mr. Jha, the MD of JSPL, as well as Mr. Amit Dixit, the analyst at ICICI Securities. Morning, Mr. Jha and Amit. Thanks so much for joining in. Well, Mr. Jha, let's come across to you first. This is going to provide another avenue in terms of exports. But on pricing, tell us first, what is the difference between domestic and export prices? And post these measures that have been levied in, any scope of pushing up prices for you?
Good morning, and thank you for that question. Before I answer that question, I must thank the government. And government in its wisdom had put in these duties also to save the domestic industry. It has also seen what has happened to the steel players in the meantime and external markets. And therefore, the government in its wisdom has taken this step, which we welcome. The 15% levy that was there, it was only causing a bit of a disruption for the domestic industry, despite having a very strong domestic demand. The difference was coming from the fact that you don't always have the demand for all the things that you produce. And as steel producers, often you need a safety valve to export. India, on the whole, is still the most growing economy amongst the large economies in the world. And therefore, it has a demand that is to be satisfied domestically. But if you don't have a safety valve, then things can go out of control. And I think that was recognized, and rightly, the duties have been rolled back. So it is not so much a question of difference between domestic and export, as much as it is to make sure that the inventories do not build up in the country.
Get that point, sir. But from a stock market perspective, we understand this is a great move for the industry. It's a step in the right direction. But the stock market wants to know what is the difference between pricing. So could you help us out with that?
I understand the question that you are asking, but I'm not answering the question in the form of what is the number that goes up as a result of this. I'll tell you that there are two effects which are coming in. It is not just that the prices will go up. Prices will have to go up in the proportion that the costs go up. And the costs will go up because of the export that has been allowed without any duties on 58% iron ore, and also it has been reduced above 58% Fe in the iron ore. Yeah. As a result, what is going to happen is that this is going to be a question of the gap between price and cost. It is not so much about the cost or about the price. So how domestic players are able to manage this gap is going to be the determinant for the stock market, and not only the price or only the cost.
Okay. Amit Dixit, who is the analyst at ICICI Securities, also tracks the space very closely, is joining in. Amit, what is your view on the stocks, especially the steel stocks? Do you see any major impact because of this news flow?
Yeah, hi, good morning, Nigel and Sonia. So what we believe is that, first of all, you have to see two things in context. The first one is that the global steel environment, neither in terms of price or in terms of consumption, is like May 22. I mean, if you look at the consumption estimates, they have been reduced almost by 3 to 5% by World Steel Association. If you look at the global prices, I mean, throughout, whatever export price you might look at, they are down 40%. So clearly the propensity to export now would be basically at a diminishing margins. And the only thing that works is essentially capacity utilization. So capacity utilization can go up. As Mr. Jha mentioned, I agree that the exports are always a relief fall. So they always help you to balance your sales. Having said that, what I see that there is a very limited scope for flat steel prices going up because we are already at 11 to 12% premium to landed cost of imports. And in that context, I see things getting difficult. I mean, the prices going up would be challenging at this stage.
Okay.
Having said that, there are a couple of areas that one can look at, for instance, stainless steel. So stainless steel exports, I think it gives a big shot in the arm for a company like Jindal Stainless. In terms of if you look the long value chain, so pellet duties have been rolled back. So pellet prices on Saturday itself were up 10 to 12% in Odisha. And I think that would help some of the DRI IF based players like Sham Metallics. And of course, since iron ore prices look to have bottomed out, that could benefit a company like NMDC.
Okay.
So these are the three key stocks that we see would benefit.
I mean, stocks across the board, except, as Amit also said, except Jindal Stainless, nothing else. Stocks are down to flat.
Yeah.
I would have expected, you know, a lot of it was perhaps, because this was widely expected for a long time, but maybe it was a lot of it was in the price. But across the board, I mean, is it surprising or not really?
It's not surprising at all, Prashant. You know, the clear-cut beneficiaries were JPIL because they export pellets, NMDC and Jindal Stainless. For the steel players, it's a step in the right direction, but you can't export anyways, right? You're not going to make any money out there. So because of that, it's not really surprising. The sell-on news has played out on some of these stocks. But let's get to Mr. Jha. Mr. Jha, you're being pretty evasive, but let's try to get a couple of details out of you. Will you export now, post this pullback of this 15%? It's providing an avenue, but will you export?
We have already been exporting.
Yes, but you were, Mr. Jha, let me come in over there. Mr. Jha, a few quarters ago, you were exporting 23 to 28% of your total produce. Is that correct? Now that number has come down to the low teens. So do you see that number go back up? Go ahead.
This is what I said while you, I'm sorry I talked over you. I did say that your real question is not whether we export, but whether we increase our exports. Now, there were certain areas where we were unable to export, but there were many other areas where there were no duties, and those areas will remain unaffected. The areas that will get affected will be the normal quality plates or wire rods, etc. So these are the things that definitely, when there is an opportunity abroad, where there are customers who have been our long-term customers in the past, and we were not able to supply because of this duty, we will definitely export back to them. And those conversations are already on.
Okay. Mr. Jha, can you tell us a little bit how the demand situation is panning out, especially in the Indian markets, given that a lot of industries have now picked up? And I also ask you because you had guided for your second half volumes to be around 4 million tons. Would you stick to that? Would you change your guidance? First on the demand front, though.
No, so from the demand front, there is still not that much of an uptick that came that was expected immediately after the festive season. And one of the major reasons has been the NGT ban on construction in the north. I think as soon as this one gets to the normal stage, then because the overall demand is still looking positive, the demand growth that we were expecting should also happen. So that's what is our expectation on the demand side. As far as our guidance is concerned, we don't change our guidance every week.
Okay. No, we wanted to know whether you'll up the guidance since you have that export avenue, but you're saying you don't change it. So we'll stick to that 4 million tons at least. I recall that you had put the caveat in there that you'll at least do 4 million tons for the second half of the year. And we normally play the tapes when you come the previous time as well. So final question, need to ask you and clarify on these reports. Some on the street or some reports indicate that JSPL is probably looking at buying out Vedanta Steel Unit. That's the erstwhile Electro Steel. Any truth?
You're really serious that on national television, I will reveal our strategy about any acquisition of any nature. Are you serious?
Okay, Mr. Jha, I mean, we need to put the questions to you in all seriousness, and we expected an answer, but you have left it pretty much open-ended. So we'll wait by whether or not there is a disclosure that's coming in. But it's been good speaking to you, Mr. Jha. And thanks so much, Amit, as well, for joining in and filling us in with your quick take on how things are shaping up for the ferrous space.
All right, that's steel as a sector, which is the sector of the day. All right, we'll come back to that. I mean, that's a constant discussion which we'll have. Stocks are down, but the market is down as well, and I think that's the bigger point. It's weighing down on everything. You know, what should on positives and of course negatives get exaggerated a little bit more on the downside. Friday's low is gone, firmly gone, and we're at what, 18,154. I would say the next kind of level to watch, although give it some more time, give it another 30 minutes, 40 minutes to see if there is that bounce coming or not. But the next broad level to watch in the downside is nothing but the 20-day moving average. But that is about almost 120 odd points, 140 points away from where we are right now. More on that, but we'll take a quick commercial break as well. Ramesh Gehani of Endurance Technologies will join in to discuss their second quarter numbers. We'll also connect with Girish Kousgi of PNB Housing Finance for their business outlook. Stay with us.
Co-powered by Century Ply.